How goes the family? Welcome back to Patterson L Properties. Hopefully you guys have a great and exceptional day. All right, let's get it in. All right, so the year 2025 basically just sucks for most regular, everyday working people across the United States of America. Most people realize it, most won't recognize it or acknowledge it or talk about it, but it's just what it is. And when it comes to today's housing market in the United States of America and all major metropolitan areas, it's too expensive, and most people cannot even afford to purchase a new home today, especially a lot of young people in the workforce. So specifically, there's a shift. People, specifically during the pandemic, we had a major shift of people moving to southern cities like Houston, Dallas, Austin, Atlanta, Miami, Tampa, etc. Now, because a lot of jobs have disappeared or a lot of jobs have been called back, because a lot of people that moved had 100% telework jobs. And then with these people, Californians and New Yorkers moving down south, they've made these cities much more, they have helped with the increase of the cost of living in these cities. So now there's a small yet but ever-growing shift of people moving to parts of the Northeast, i.e. Upstate New York, where it's cheaper than living in New York City, New Hampshire, Vermont, and other Midwestern states like Ohio, Indiana, Wisconsin, Illinois, etc., because the cost of living has gotten those areas are much cheaper. In Michigan, where the demand isn't as high for people to live, and then of course, because of certain issues that happen from a global warming standpoint, fires in California, hurricanes on the Gulf Coast, i.e. Texas, Florida specifically, and the idea, and for a lot of people, want to move back because they want to, be with their loved ones, because it might be cheaper to live in other parts of the South, but they don't have any friends there, they don't have family there, and they just basically isolated. And living in a cheaper state and city is nice when you're older, but it kind of sucks in a sense when you still have a lot of life to live and you don't really connect with anybody. So I take this from somebody who grew up in the DMV area, where I really don't really connect with anybody like that. Anyway, so back to the story at hand. So due to increasing extreme weather conditions such as floodings, hurricanes and wildfires has added to the possibility, so it hasn't happened yet, but the possibility of higher home insurance and personal property taxes. According to the article that I read the other day, mortgage lenders could lose $1.2 billion in weather-driven mortgage foreclosures this year. In 2025, researchers have found out at the company that analyzes the impact of climate change or financial risks. The situation is projected to get even worse in the next decade, with this number expected to grow fourfold to $5.4 billion by 2035. And before I go on, the possibility of America becoming a nation where most of the regular everyday working people will be like a third world country, meaning that you will own nothing, and you will somewhat, in a sense, become happy about it. And in a sense, specifically in the major metropolitan cities, it's becoming more and more true every single day. The article also stated that it's no longer sufficient to evaluate the borrower's credit score alone. Climate risks associated with the property itself has become a core determinant of creditworthiness. This marks a structural shift in financial risk assessment, with major consequences for lenders, investors, and homeowners alike. And with this change within a culture of the lending industry can make it that much more harder for people to obtain a home, or for current homeowners to retain/maintain their homes. So the article ended on this note, stating that expanding access to affordable, comprehensive climate hazardous insurance, improving flood risk mapping could mitigate foreclosure risks. Integrating climate risks into credit models and strengthening federal and private loss mitigation programs can also help lenders and borrowers adapt to rising disaster exposure, he stated. Ultimately, climate is just at the beginning stages of being priced into the real estate market, and our ability to properly account for that risk early will make a huge difference in the financial consequence further downstream. So we shall see where things end up going within today and definitely tomorrow's housing market, because unless there is some sort of accountability and change with regulation in the industry changes to ensure more and more potential clients for home loans can actually obtain one. So we shall see what happens in the future and go from there. But areas that are significantly impacted from a climate change perspective. More and more people who are doing the research and paying attention to things like this are saying to themselves, yeah, not me. I'd rather live in a state that's less likely to have the chance of having a tornado, hurricane, earthquake, and brush fires. So go from there. Don't forget Patterson Hill Properties. We wholesale real estate in the DMV area, the Pennsylvania area, specifically York, Reading, Harrisburg, and Philadelphia. Go from there. If you're a stock market investor, crypto investor, individual retirement account investor, don't forget to check out WEBULL, Stash, Acorns, Crypto.com, Coinbase. All those platforms you'll be able to make some money moves as you do your investments and do your own homework from those specific vehicles. And obviously, if you want to donate to the channel, my Cash App, my PayPal, and my Venmo is all in the links in the description. So go from there. Thank you for watching. Remember, you can't get fired if you own the company. It's 2025, going into 2026 since we're in June right now. It's time to be doing something. Do the great thiefy things. Like, share, and subscribe. Have a great day. Make money moves so you can live well like forward. It's in Spanish. Bienvenido a la vida. Welcome to the life.